What's up, everyone? I hope you guys are ready because the market is finally about to get exciting. In today's video, we have AMD earnings to cover. We have how Nvidia just lost $5 billion worth of sales. We have a lot of very interesting charts that you won't want to miss and predictions for tomorrow. We also have Powell speaking tomorrow and even more exciting earnings. The market's heating up right now, and this is when the best opportunities are presented. So I hope you guys are ready, and we're not wasting any time today. So Tom, let's get right into it.
Yeah, the overall market had a huge run to the upside. Look at the SPY today. I know it was pretty bleak early on. It was pretty slow. We even moved down a little bit at open, but overall, we ended up very, very nicely today to the upside, which is fantastic. But you know what? Guess what did not end up nice to the upside is AMD earnings. And you know what? AMD broke under $100 a long time ago. And ever since they broke under there, they have failed to break back above. Today, they actually had a great run to the upside. They got pretty damn close, hitting 99.50 in after hours. But now they're all the way back down to 93.61. And guys, it's not necessarily AMD's earnings this time that's causing them to fall. It's mainly their guidance for the future, which is a big negative in my opinion. Anytime you see negative guidance, it is definitely a bad thing to see, especially out of something like AMD, which so many consumers use and even commercial players alike.
No doubt. So basically, AMD made more profit than everyone was expecting, and they brought in more revenue than everyone was expecting, but the problem came for what's to come, you can say. So they basically said for the fourth quarter, they're expecting around $6.1 billion in sales, where analysts were expecting them to have like 6.37 to like $6.4 billion in sales. So they kind of disappointed there, and investors weren't having it today. So they drove the stock to the ground, and that's why it's struggling in after hours. So keep this in mind going forward. AMD is one of the more powerhouse big tech stocks, and when they fall, it sure drags a lot of other stocks down with them and just adds that extra selling pressure into the market. But Tom, here's the thing. While AMD earnings have been pretty volatile so far, we still have a lot more earnings on the schedule for tomorrow and the rest of the week, so enlighten us.
Yeah, you know, the rest of the week is going to be very, very exciting. Whenever we look at the overall earnings chart here, it is actually looking pretty hot. Now, AMD is obviously falling down in after hours, right? I know a lot of people might be thinking to themselves, hey, that sucks. One of the big tech stocks is falling. I'm kind of glad that they stayed under $100, to be honest. I think playing it under 100 has a lot better of an opportunity in the short term than something up above there. So I'll definitely be watching AMD over the next few days for some continuations. But Mike, tomorrow we have Norwegian Cruise Lines, a cruise line in the morning, CVS, PayPal in after hours with Roku. Those are pretty two big stocks. Another semiconductor with Qualcomm. Even Airbnb and Etsy are reporting tomorrow night. So watch those. Thursday, we have Palantir, Shopify, Lilly, even Moderna, Barrick Gold, which is a gold miner. Keep them in mind. Thursday and after hours, though, is the day that, or I should say that, I would say the time frame, right? Thursday and after hours, everybody look within this blue box right now, guys. I mean, Apple, Square, DraftKings, Carvana, Coinbase, Starbucks, it's Cloudflare even. I mean, Mike, there are so many reporting Thursday. Apple's obviously going to be the biggest one of the week, but even DraftKings and Square are awesome growth stocks in the short term.
It's that time of the year, Tom. It is earnings season, and this is like the heart of it. And this is where, you know, basically we look at the market, and these stocks have the power to just put the nail in the coffin and, you know, really drive that selling pressure to new heights. But it can also have like an easing effect as well. And so far, this earnings season has been more bearish than it has been bullish. And, you know, I guess from here on out, it's up to Apple and some of these other big dogs to see what the market's fate will be. But earnings is not the only main event this week. tomorrow we have the man, the myth, the legend, Jerome Powell, coming back for another interest rate decision. Basically, he's expected to keep interest rates exactly the same. The main time tomorrow is 2 p.m. Eastern time. That is when the interest rate decision is. And then at 2:30 p.m. Eastern time is when Jerome Powell speaks. And Tom, as we all know, when Jerome Powell speaks, it has a ton of power to move the market and basically more than anything else.
Exactly. He is the chairman of the Federal Reserve, and I'll be honest, Mike, over the past few years, it kind of seems like he's kind of in control of everything. I know that people love to look at other things going on throughout the economy, throughout, the market in general, but man, the Federal Reserve, the way that they've been adding money into the market, the way that they take money away, the way that they start obviously creating more pressure on consumers is playing a big role lately. So hopefully they at least pause, if not even talk about easing a little bit sooner. A lot of people think that they might speak about easing sooner, given that, the whole Israel situation's going on. So there could be a few different ways Powell kind of goes at this. And I think that whenever we talk about easing, it's important to realize that, look, they're going to be easing soon, right? They're expected to start lowering interest rates around May to June of next year. Maybe they'll say something sooner, and that would be a great sign if they do, in my opinion, for the market.
Yeah, so we shall see. Jerome Powell, in simple terms, is the man behind the money printer and the money vacuum, and he's been doing a lot more vacuuming than printing lately, so keep that in mind for tomorrow. But Tom, we talked a bunch about AMD stocks so far, and the way I like to look at it is NVIDIA is kind of like the older brother to AMD, and they did not have any good news today, to say it nicely. Basically, news came out where NVIDIA shares, tanked down as word got out that they will likely have to cancel $5 billion worth of their orders to China. This will make up around like 15 to 16% of their revenue. And basically what happened is the United States has been increasing the restrictions and regulations when it comes to these AI semiconductor chips because they don't want China's military to, get more advanced than our military. And, AI is very powerful and the U.S. government wants to, keep it in the right hands. And NVIDIA, is missing out on $5 billion here, and the investors didn't love it too much.
Yeah, and a lot of people might think to themselves, well, hey, like, why does this have even such a big deal to do with NVIDIA? Like, what militarily would use a bunch of AI capabilities, right? Well, hey, maybe imagine like something where it's picking out targets from like really far away with a computer system, or it's trying to do a whole bunch of math, making sure a rocket hits right on the mark rather than missing and hitting something else or something like that. These things come into play in the military. So definitely keep your eyes on NVIDIA, Mike. That is some very interesting news here. And we know that China really comes into play with these stocks in a big, big way, right? Like China's market is huge. Apple's China market is huge. There's so many markets out there that obviously they don't rely on China, but it's a big player, right? Like, let's just imagine that China just dropped NVIDIA tomorrow. It would be a huge hit on NVIDIA's stock. You'd probably wake up to it down like 50% or something nuts, That's how big China is. So at least for now, it's just a $5 billion hit. But Mike, whenever we go over to our dashboard, that $5 billion hit is actually a fairly large percentage of their overall revenue, which is pretty concerning overall.
Exactly. So anytime you have bad news related to China, the stocks normally suffer. And while NVIDIA only closed down by around 1% today, at its lowest point, it was down a lot more than that. It was down like 5% at one point, and, the selling pressure was pretty nasty. But either way, keep a close eye on this one going forward. It's also right at that $400 support level, and if it falls below that, the selling pressure can definitely intensify. But Tom, looking at the overall market for 1 second, we can see that, clearly so far this week, the market has been doing pretty good. It hasn't been like, the best 2 days ever, but, it's definitely been relatively bullish. And over the past couple weeks and months, bears have been in control. I saw this very great chart today that we're going to show right now that shows the S&P 500 over the past 2 years, and it shows the 4 different corrections that it has had. We are in a correction right now. The market's down over 10% from highs, and out of the other 3 recent corrections, I guess you could say the least severe one was a 13% correction, and the most severe one was like almost a 21% correction. So at least looking at these other corrections, it would lead you to believe that the market has some more room to drop.
Yeah, I would agree. And, I look at these drops coming in from the past 3 corrections. And, Mike, all 3 of these corrections came within 2022, right? At least parts of them. The very first correction was partly 2021, but for the most part, they were all within 2022 if you count it from the beginning of the year there. So we look at those corrections, and, Mike, so far this year, this first correction has been just kind of like right on par with that first correction from last year. So I would think that it could get to 13%. There's a lot of pressure on the economy now. What was going on in 2022? There was a whole bunch of different reasons why the market was falling. One of them was interest rates rising out to rising up beyond anybody's belief, but there were a lot of different reasons at that time. Now we have even Israel stacked on top of those other reasons, and the economy is getting even worse. We're seeing even worse credit card delinquency numbers. I know I keep bringing that up, but that really shows consumers, what do consumers resort to whenever they have no money? It's credit cards, right? And then now they can't even make the payments for those credit cards. So it's just, there's a lot of pressure on the consumers out there. And whenever we look at these pullbacks, it's very interesting because the SPY seems like it maybe hit a short-term bottom. It's starting to run up, but don't be surprised if 420 or 425 rejects and, the SPY is a lot lower than where it just hit at 410. Maybe we'll test 400 sometime soon.
Yeah, so we shall see. And then there's another great chart that I want to showcase that shows the max intra-year drawdown. And basically it just shows again that, hey, the market's down around 10.2 to 10.3% this year. And while that might seem like a lot, it's very normal. The average drawdown is 16%. And there have been multiple examples over time where you have a drawdown of, 25%, 33%, 48%, or even more. So it's like, the blood we've been seeing, it's definitely like, a decent pullback, but historically speaking, this is very normal, and it's very normal. It's the only way to say it.
I'll say this, Mike, this is pretty insane to see these drawdowns. What did you say the average drawdown percentage was one more time?
Yep, so it's like 16% for, on average since 1928 in the S&P 500.
I mean, that's pretty insane, guys. Like, we're not even to the average yet. I mean, Mike, honestly, we got room to go, right? If we're gonna talk about averages and the drawdown percentage.
Yeah, exactly. So, either way, just keep this in mind going forward. There's definitely potential for some more blood ahead, and a lot of it depends on, how these situations progress, whether it's inflation or, you could say the war in Israel and Palestine and Ukraine and Russia and all that crazy stuff, right? So keep that in mind going forward. And, as we talked a little bit about inflation and Jerome Powell, I want to showcase this chart right here that shows basically the inflation rate for what we saw over the past couple of years compared to what happened in between 1966 and 1982. The red line is our situation now, and we can see inflation shot up for, a couple months there, and then it has since calmed down, but it has not calmed down enough yet where it's time to celebrate. And you could say, 1976, the situation was exactly the same, but as, the years went on, inflation kept going higher, and there was a second wave. And if we see this in the market, that would be extremely, extremely bad. So that's why Jerome Powell, just like tomorrow, he's going to talk about, trying to balance the act of, not crashing the economy by keeping rates this high, but also at the same time ensuring that we're not going to see a double dip on this inflation.
Yeah, and could you imagine if we did see double dip. I think that Jerome Powell and the Federal Reserve's heads might explode if that happened. They would be like, he would be begging Biden to go back in time and put Lael Brainerd in instead of him as the as the chairman or chairwoman, I should say, at that time. But yeah, he would not want to be the guy responsible for what would happen over those 2 years. And then as his term ends, it's like right at the worst time, So that would suck for Powell. But Powell has a tough job, right? Like, let's be honest. It's very hard to keep inflation in check. These guys talk a lot about lag. Whenever they do anything, it lags in the economy by a certain amount, right? Powell's talked about it with a lot of questions after his speeches and stuff. People will say, hey, doesn't this lag by a couple months? And he'll say, yes, it does. Then again, they account for that. So, at least they try to. And sometimes there might be events like Israel that might even make them make more harsher decisions. So we'll have to see what he says. I think that what he says pretending to Israel tomorrow is going to be very, very important, because if he says something like, hey, Israel is making us ease sooner, that might be a pretty big statement.
So yeah, we will see, but enough talk about the economy and all that boring stuff. Let's get right into some setups and predictions for tomorrow. With the first one, I am looking again at ticker symbol Chewy, CHWY. Chewy is a stock that I've talked about a bunch over the past couple weeks. I also talked about it yesterday, and it has been on a pretty nice run, and I think it has even more upside potential. Again, very oversold, bouncing off support, and buyers are coming back in. I own this stock for the long term, and I like the short-term risk reward to the upside.
Yeah, let's go, Chewy. I love that breakout. I'm talking about breakouts here. My first play is also a pretty good breakout play, but this is a much slower type of stock, which is Lockheed Martin. But today they moved up 1.97%, which is actually pretty damn good for them. So they ended up running up. These defense stocks are running up today. I noticed it all across the board, whether you're looking at Lockheed Martin or RTX maybe, or L3 Harris, which LHX, they're all running up. And Lockheed's breaking that recent high here, breaking resistance around 453. So I love this breakout. If they keep this up tomorrow, it'll be a pretty good stock. These defense stocks have been holding their highs recently, and who knows, maybe they'll go on another nice run here.
Alrighty, another stock I'm watching is Disney. So Disney had a decent day today, and it is still bouncing off that $80 support. I think the upside risk reward right now is pretty favorable, and I would love to see this price action, or this recent price action, I should say, continue to the upside.
Yeah, it's great. I love that long-term support there. We talked about it a lot. It goes all the way back to 2020, even 2014. So definitely keep your eyes on $79 to $80 for Disney. And with my final play, Mike, it is Square. I know this is a stock that you usually like, and I'll be honest, it has not been the best lately. But today, we saw so many growth stocks come up off of lows, and Square popped back above 40. If they can hold 40 tomorrow morning and start to break of $40.50, I will look at those calls. Squares in that growth stock sector, if they start to pop off, there could be a pretty good move out of them, kind of like what we saw today. So watch them for that continuation, and they are getting so low at this point. Like, there's got to be some type of green candles coming in soon. Man, I'm going to have to call Jack Dorsey and give him a piece of my mind.
Alrighty. Well, Tom, let's get right into the momentum plays. And with the first one, we have NVIDIA to the downside.
NVDA, what a move. They had that big move down early morning today. If they get back under $400 tomorrow, look at those puts. When they fell under $400 today, that initial move down was amazing. I mean, that could have been a great scalp. So watch them down under $400 again.
All right, with the next one, we have Bank of America to the upside.
BAC, nice pop-up. If they break 2640 to the upside, look at the calls.
All right, and now with the last one, we have TLT for both directions. This one will have a pretty crazy day tomorrow, given the Jerome Powell interest rate event.
Yeah, definitely. If they break under 83 on TLT, then go ahead and look at the puts. That'll be a pretty good support on them. If they end up breaking above 83.80, then look at those calls. So 83.80 for calls and $83 even for puts to the downside.
Sounds good. So we have that downside level for puts. We have the upside level for calls for TLT. Don't forget about Bank of America and the upside level for calls there. And then don't forget about NVIDIA and the downside level for puts there. But quick side note, if you guys are new to the channel and you are not already subscribed, definitely subscribe. When you do, you'll see our videos recommended to you more often. In every single video, we talk about key earnings, important data, charts you won't find anywhere else, and we basically spend hours worth of research and everything you can imagine just trying to cram all the important and relevant information in the market right now into a nice, easy to watch, like 20 to 25 minute video. So if you like it, subscribe and you'll hear from us more often. But with that being said, Tom, let's jump right into today's big money trade of the day. And today we are looking at a $1.4 million trade with ticker symbol ACRS. This is one of those crazy biopharmaceutical stocks. These types of stocks move big time off of clinical drug trial data, news, outlooks, and things like that. These stocks are very crazy, which, you know, if you can handle the heat, then they're awesome. But, you know, if you're not into high-risk setups, then don't follow this. But either way, today, a big money trader dumped $1.4 million into ACRS to the upside. In a simple way, you know, the higher ACRS goes, the more money this trader will make. In a more advanced way, they bought a call debit spread. They bought the 5-strike call options, and they shorted the 20-strike call options, both of which expire on December 15th of 2023. If you don't want to deal with an option spread, you can just grab the ACRS 5-strike call options that expire on December 15th of 2023, and it will be very similar.
Yeah, and I really like this play, Mike. Sometimes whenever you get this big money coming into the pharmaceuticals, they might know something. And with today, we had that first big pop to the upside, and it makes sense for them to get in right here. It's running up into $5. And with this big downtrend lately, I would think they could possibly uptrend to 550, if not even 6, fairly safely, if not even higher. Imagine if some truly good news ends up coming in. Now, we don't know that's going to come in, but let's just say you're following the play up nice and safely, and then that news comes in. Well, hey, you can reap those rewards. So I like it, Mike. It's pretty cool to see this spread coming in, but it's a nice bullish setup here on a therapeutic/pharmaceutical stock that normally goes pretty crazy.
Yeah, so high risk, high reward. Either way, keep a close eye on it going forward. These stocks are pretty crazy, and whenever you see a big money trader, put $1.4 million in a play, it's definitely at least worth following. But, with everything being said, Tom, we had a pretty crazy day in the market today, and the market's only going to get crazier as the week goes by, whether it's Powell tomorrow and more earnings tomorrow, or the plethora of powerhouse earnings on Thursday. We have a lot of opportunities right in front of us, so I hope you guys are excited. And even if today or yesterday or the past couple days have been rough for you in the markets, that's all right. Keep your heads up high. Keep those stop losses in place. When you have stop losses and proper risk management, it should be impossible for you to have, big losses, right? Because, there's at least a theoretical maximum amount of risk that you're willing to take. However, when we do see those big days, whether they're to the upside or the downside, when your risk is managed correctly, those days can severely outweigh the lost days. So, even if it's been rough, it's all right. Keep your heads up high, keep that risk managed, and I think we have a lot of opportunities coming our way, not only over the next couple days, but even over the next couple weeks. So, Tom, do you have any final thoughts or anything else that's on your mind?
Yeah, definitely watch out for Powell tomorrow, 2 p.m. Eastern Time, 2:30 p.m. Eastern Time. We will be live on the StockedUp Live YouTube channel. Check it out. I will have Powell side by side with the S&P 500 and the market. So make sure you check that out at that specific time. But let's go, Mike. Tomorrow is going to be a big day for the market. Powell better give us an insight on those rates in the future. I swear to God, if he says something just like, we're going to look at the data, I'm going to be very upset. I want to see a good move here.
Oh my gosh, we will see. But yeah, thank you guys so much for watching. Again, if you're new, make sure to subscribe. You'll hear from us more often. But besides that, let's have a great rest of the week.